Dividend investing is one of the easiest and is now becoming one of the most popular ways in the investing community to truly earn passive income. The goal for investors in investing for dividends is to have enough money to pay for most, if not all, their expenses in retirement or in general to enjoy a more fuller life without the need of working a stressful 9-to-5 job. Now, dividend investing is an investing strategy that involves buying stocks in companies that pay out a portion of the revenue to you as a shareholder. This strategy is attractive as it provides a constant stream of cash flow, which is great during retirement, and dividend stocks are often less volatile than regular growth stocks. However, there's a couple major drawbacks to this dividend growth strategy to live off your dividends that might scare off or discourage some investors early on in the process. One of the drawbacks is you have to have a massive stock portfolio with hundreds of thousands of dollars or even multiple millions of dollars to achieve this goal. And another is that this investing goal might even take decades and decades of investing in the stock market to see the results of living partially or completely off your dividend income. But in this video, I'm going to try and solve this just for you. Hello guys, my name is Milla. Welcome to my YouTube channel. In this video, I'm going to be providing 3 of the fastest and most reliable ways possible to live off your dividends so that you can fast track your journey to retirement. So without further ado, please sit back, relax, grab a cup of coffee, and let's get started. Picture this. You're a dividend investor and you start out by taking $10,000 out of your savings account and you decide to invest that money into one of the most popular dividend stocks on the market today, that being Coca-Cola. Coca-Cola currently has a dividend yield of 2.93% and pays out 44 cents quarterly to investors for every share that they own in Coca-Cola stock. That's $1.76 a year in annual dividends. If we invested $10,000 into Coca-Cola stock, we would earn roughly $293 a year in annual dividends, which is less than $25 a month in passive income. Now, earning $25 a month in passive income after investing $10,000 doesn't seem so exciting now, does it? Even with investing $1 million into Coca-Cola stock, you will receive less than $30,000 a year in annual dividends, which is not a lot compared to how much the average American spends per year, which is around $40,000 to $80,000 in expenses. Now, one of the fastest ways to live off your dividends is to buy covered call ETFs. Covered call ETFs is a type of fund that allows investors to collect income through capital appreciation and from monthly dividend payments. These ETFs invest in a basket of stocks but also boost investor income by writing call options on the stocks held within the fund. Every month when the fund sells these option contracts, the option premium that the fund earns are then passed on to the investors in the form of dividends. As a result, what we as investors receive are extremely high dividend payments every single month as opposed to traditional dividend payments, which are usually quarterly. Now, 3 of the best covered call ETFs, in my opinion, are going to be JEPI, JEPQ, and QYLD. Now, the cool thing about these ETFs is that they have double-digit dividend yields, which is far more attractive to investors than single-digit yields under 3%. JEPI has a dividend yield of 11.71%, JEPQ has a dividend yield of 9.97%, and QYLD comes in at the highest dividend yield of 12.93%. So let's say we invested $10,000 into one of these covered call ETFs. Let's choose JEPI for example. With the 11.71% dividend yield, we would earn roughly $1,171 a year in annual dividends and just under $100 a month in passive income without having to lift a finger. If we had $1 million invested into JEPI, we would earn roughly $117,000 a year in annual dividends and just under $10,000 a month in passive income on top of stock price growth. Now that sounds a lot better compared to traditional dividend stocks, like our previous example with Coca-Cola, where we would need roughly $4 million just to achieve the same level of dividend income. Now, the second fastest possible way to live off your dividends is by investing in high-yield real estate investment trusts, also known as REITs. REITs are companies that own and invest in income-producing real estate properties such as large office and apartment buildings, shopping centers, and hotels. These companies pay out a large portion of their earnings in the form of dividends to shareholders, in addition to providing steady long-term capital appreciation. Now, two of the best REITs to invest for high dividends, in my opinion, are going to be Realty Income and VICI Properties. Realty Income has a dividend yield of 4.49%, and VICI Properties has a dividend yield of 4.43%, which are both double than what most dividend stocks pay out today. Now, if we invested $10,000 into Realty Income, which is a monthly paying dividend stock, we would earn roughly $450 a year in annual dividends, or less than $38 a month in passive income. And if we had $1 million invested in Realty Income, we would earn roughly $45,000 a year in annual dividends, or around $3,750 a month in passive income, which is going to be just enough to cover most of our living expenses in retirement. Now, there are some higher paying dividend REITs with dividend yields of over 15%. However, I'm not including them on this list because of the significant risks that they pose to investors, and the quality of their portfolios in their stock aren't as good as Realty Income or even VICI Properties. I literally Googled some of the highest paying REITs, and this stock came up with a dividend yield of over 16%, but it's not worth the risk or investment, as this stock would have lost you over 50% of your money, versus Realty Income and VICI Properties would have actually made you even more money due to share price growth, even though they have a lower dividend yield. Now, the third fastest way to live off your dividends and retire early is going to be a no-brainer, and that's investing in high-quality dividend stocks and ETFs. If we Google search the highest paying dividend stocks to invest in today, beware of articles that might pop up, like this one that says to invest in a dividend stock called VF Corporation. If you go to any investing app and search VF Corporation, you'll see that they come in with a high dividend yield of over 7%, but if we look at their stock history, they're actually down over 55% in the past year and down over 66% in the past 5 years. Now, this is just such a huge red flag, because if you invested into this company, you would have lost a fair amount of money, and dividends don't really matter if you're just going to be losing money on the stock falling. Now, to solve this, you can invest into high quality, emphasis on quality, dividend stocks or ETFs such as SCHD, VYM, or DGRO, which have excellent stocks comprised inside their fund. Now, for example purposes, if we invested $10,000 into a quality ETF like SCHD with a dividend yield of over 3.33%, we would earn roughly $333 a year in annual dividend income, or just under $28 a month in passive income, which is going to be higher than normal dividend growth stocks like a previous example with Coca-Cola stock that has a lower dividend yield. Another great thing about a quality ETF like SCHD is that it went up over 53% in the past 5 years, which is on track and even outperformed the S&P 500 and even Coca-Cola stock, which is great for investors to collect high dividend payments of over 3% and have high share price growth, which can fast track your journey to retire early and pay off expenses from dividends without taking out money from your investment portfolio. Now, a few tips that I have for anyone wanting to retire early off dividends or to follow a dividend growth investment strategy is to always do your own research before you pull the trigger on any investments that you make with your own money. My second tip is to always, and I mean always, reinvest your dividends so you can increase the snowball effect of your dividend payments and get paid more every month and quarter, and even earn more compound interest, which can fast track your journey to early retirement. And lastly, never give up on your investment journey, as I'm sure you're well on your way to a successful career of dividend investing. Thank you so much for watching this video, and please do comment down below for which stock or ETF you're investing in to retire early for high dividend payments, or just to pay off your expenses in general, and like this video because this cute puppy did. Please don't forget to subscribe, and I hope you guys have a great rest of your day and continue to crush in the stock market, and I hope to see you in the next one. Peace.